Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. Well, the market, as expected, as discussed yesterday morning in the podcast, exactly behaved the same. In fact, the market opened with a gap down, big gap down, and from there, a big rally upwards and a big fall from there on. A completely volatile day, just as expected, a day before the monthly expiry today. Well, that's how the markets are. The markets are totally crazy during the monthly expiry, especially. And today is the monthly expiry for May. And May has been a good month for India as such, majorly because of a continuous buying by FIIs. Yesterday, also, they bought. Again, if you see total, if yesterday the DIS have almost bought for 1,000 crores. FIIs have also bought for about 300 crores, almost 1,300 crores of net buying, but still the market fell big thanks to retailers and thanks to the huge volume which is being built up in options in India. So, of course, a lot of retailers have entered the market in the retail, derivative sector, and derivatives have been causing like absolute, crazy volatility in the market. So, thank God our trades this week have been again good in spite of the market being so volatile. We are already sitting with some decent profit there and looking forward to some, decent closing this week for today. Well, of course, the market is again opening gap down today, but we will discuss about that a little later. Before that, let us discuss about the important results that came out yesterday. So, of course, LIC came out with the results. The results look amazing on paper, right? The profits have increased a lot, but then I am not really happy with it because the income from premium has actually gone down. Now, insurance company whose premium income is the major income to the company, if that goes down, what does it mean? So that's a profit is something that anybody can make it. You just have to cut some costs here and there, and revenue remains the same. If you just cut cost, your profit starts increasing. But that is not the right way to run a business. So I'm not really happy with what LIC is showing up. But it's time LIC actually pulls its socks. Not that it doesn't have capability; it's got an amazing network of people from across the country. But then the way the organization is still run like a government organization is definitely not right. This is my personal view again. LIC, I don't know, it's got such a great network, such a big trust factor on it, but still the business that they do is petty compared to the what other private players are doing in the market. So of course, not a great stock to be looking at right now. Though they've got a lot of funds and a lot of cash flow, but it's not what something that's exciting me. Well, the next thing was Hindalco. Hindalco came out with decent results, but that's okay. I would say the market is when metals are generally cyclical in nature, and that's okay. And in fact, I am expecting Hindalco to be doing well in the upcoming quarters as the demand actually grows. And of course, I'm already invested in Hindalco. This is just a disclaimer. Well, I am not a SEBI registered analyst, and do your research before investing in stocks. And if you need support from us, that's where we are there. You can have a meeting with us, and of course, fix your appointment with our team members. Just go to mpiinvest.com, the website mentioned in the scroll as well as downside in the description, and we can have a meeting there. Well, so apart from that, if you look at the market, so yesterday's banking sector was totally weak yesterday. The bank nifty actually went close to its all-time high, but from there has fallen almost 400 points. So not looking great right now. Of course, the volatility could be induced because of the monthly expiry, but then of course not a great sign right now. So it doesn't look like it's going to break out as of now. But our range that we had expected for the closing and expiry of this week was 18,000 to 18,400, and that remains intact. So this is something that we had discussed in the Market Pulse video on Sunday, and that view continues to hold as of now. So I am expecting the market to close, of course, within 18,000 to 18,400, but I'm just trying to kind of slightly increasing the downside. Looks like 18,100 could be a good level. So I'm expecting today to expire between 18,100 to 18,400. So this is my expectation for the day. Of course, the few trades that we've taken at Gold Plus Club and our MBA community is also doing well for this week. We should be closing with a decent 1% plus profit this week, I guess. So apart from that, the market is after Indian markets closed, the European markets is was something I should talk about. So yesterday the European CPI data came in, which came in higher, up by 1.2% compared to last month and almost 8.7% compared to last year, which is still not a great sign. So European markets are still struggling. Majorly, I would say, is because of the gas issue after the Russian war started. Russia-Ukraine war has started, so the gas prices have gone up really high, and European markets are bound to be using a lot of energy from that side, and that is actually going to cause all these issues. So until this is so sorted, they would continue to be in trouble. So that is something which is not good, and we could see all the European markets falling down by more than 1.5% yesterday, and that was not a great sign. After that, if you come back to US still talks about the same debt ceiling issue. In fact, I am tired of talking about it, but they're still not decided on it. Like I said, I don't have to talk anything about it, but US markets closed negative. But something interesting that happened was after the US markets closed officially, then Nvidia came out with results, and they said that there is a huge demand for Nvidia chips, due to the AI, due to the resurgence of AI, and that was a great news. In fact, after markets closing in the US, the aftermarket trading has actually taken Nvidia up by almost 15%. In fact, my investment in Nvidia is already up by 130%. And I think 15% would make it up at 145%. So I'm really happy about my investment in the US market there. But of course, along with that, the futures, Nasdaq futures are looking positive. So that means IT sector would be in focus today. In fact, IT sector was kind of gaining steam, but it lost steam yesterday. So hopefully let us see some steam coming back from the IT sector today. And also, now that the banking sector has fallen so much, I hope it takes some support here. So with that, probably even if there's a gap down, I hope the market to be kind of, moving up initially, and then volatility to be continuing for the day. So I would not be trading for the day, apart from my, few positions which I have, which I might square off. And I may take some position for the next week today, not planning to do a trading during the day today. So that is naturally because of the huge volatility of the monthly expiry. So that's it for now. I think we've covered it all for the day. Let us see how the markets react today. And of course, it's better to stay safe. And if you're not an expert in the market, better not to take any trades in the index as on today, because things can go any side and directions can change at any moment, and the trend can actually change at any moment. So that's it for now. Do look out for volatility in the market. This is Srikanth Rajan signing off. But before we leave, do remember to press the like button if you love the content that we share. That of course motivates us. And if you're still not subscribed to our channel, it's high time you subscribe. And I'm sure you would love to hear the other notifications when we have the latest videos uploaded. Goodbye. Have a great week ahead.